Welcome everyone to our 59th webinar since April. We're very pleased to have you all with us, of course. This morning we're particularly privileged to have two vice presidents of BDC with us, Louise Langevin, who's vice president for Quebec, and Robert Duffy, who's vice president, her counterpart in Ontario. And on this IP financing subject with Lally, who's the head of it, which is a relatively new initiative for the BDC. For the M&A Club, the webinars have been very successful with high attendance, surprisingly high attendance. We've had very good speakers, of course, as we have this morning. And it's connected the whole of Canada in a new way, which of course we didn't do with our live meetings, which are really, people moved around, members moved around from meeting to meeting, let's say in the GTA or in the Montreal area, but it was really regional. Nobody's going to Calgary for lunch, actually. The silver lining of COVID for us has been that we're connecting all these members from across Canada. We have 1,000 members now. We're going to be closing on 1,100 soon. Jarzowski Fraser just joined us, BCF, a big law firm in Quebec, and Lavery and others. In any case, so there's a lot of member benefit coming out of these webinars, including the M&A Club Connect, which is for members only, where it's a virtual round table, which Zoom call a meeting. So each person can pitch their own service or obviously buy, sell, or financing opportunity. So that's what's coming. There will be more really member benefits coming on our new website. There's a new website still, maclub.ca, but there's an entirely new website since about a week. And there'll be, we're already with Salesforce, but we'll be adding a portal which Salesforce called Community, or some people call Community Cloud, and there'll be the additional member benefits will be up there, actually on the site. If you click around, it's kind of anyway, it's very easy to navigate and you'll see it. So that's what's doing. The gala, the M&A Awards Gala is scheduled for November 18th in Montreal, and we're very optimistic that that's going to happen at the Windsor. Nomination forms will be going out soon. And in Toronto, we're still hoping for a first Toronto M&A Awards Gala at King Edward Hotel in early December, and we'll have more news on that as the weeks go by. So without further ado, it's my pleasure to introduce Robert Duffy, who's the Vice President for BDC in the Ontario region. And thank you very much, Robert, for bringing in Lally, and thank you, Louise, for bringing this all together.
And it's great to be here with everyone virtually, although Bram got me thinking about those in-person events. That event at a hotel in December sure sounds pretty good as I sit here in my home office, as I have for the last year now. But it's my pleasure today to be introducing my colleague, Lally Rementilla. Lally's managing partner, intellectual property-backed financing at BDC Capital. In this role, she oversees and provides strategic guidance to a national team that helps companies accelerate their growth or the commercialization of their innovation. We'll be hearing about this and the opportunity for IP in Canada from Lally today. Earlier in her career, Lally moved into investment following nearly 2 decades of experience as a financial executive in the technology sector, becoming Chief Financial Officer and then President and Chief Executive Officer of commercial lender Quantius. At Quantius, she structured and launched the company's main fund and helped build a diverse portfolio of knowledge-based companies. Prior to that, she held senior finance roles at Nulogy, Lava Life, and Lucent Technologies Canada. Lally joined BDC in May 2020, along with her team from Quantius. So we've been getting to know her and her team virtually. But I already know Lally is someone who's a proud supporter of Canadian innovation and who gets a lot of satisfaction from partnering with founders and management teams to help them scale. And I'm looking forward to hearing from her along with you today. Lally, over to you.
Thank you very much, Rob, and good afternoon or early good afternoon to everyone. It's a pleasure to be here today, and I look forward to helping you gain more awareness about what IP-backed financing is and how we can all help very innovative companies across Canada. I'm just going to share my screen. Okay, so today I'm going to be speaking about IP-backed financing, but I'll start off with a very brief introduction about the BDC, which I believe most of you already know about. I'm also going to be talking about competing in the intangibles economy and what that means and what led us to launching this intellectual property-backed financing fund. And then I will wrap it up with a couple of concluding remarks. So about BDC, as everyone knows, BDC is the Bank for Canadian Entrepreneurs. We have a dedicated focus to helping small and medium-sized enterprises in Canada grow and scale. And that is through a network of 2,400 employees, as well as with a high client satisfaction rate of 94%. So 62,000 is the client base that we have right now. Within BDC, we have three main pillars, the financing or lending arm, the capital arm, and advisory services. And it is within BDC Capital that IP-backed financing is part of. So we and our colleagues in our venture capital, growth and transition, and growth equity colleagues are here to really help create and scale the next Canadian global champions. So let's talk about really the purpose of this fund, which is really helping Canadian companies compete in the intangibles economy. As everyone knows, or as everyone is probably already reading about, the intangibles economy is already here. If you look at the graph on the left side of the screen, you will see that the S&P 500, if you take that as a proxy for the global economy, essentially has moved towards generating most of its value from intangible assets. If you look at the screen on the chart at the right, you will see that companies globally in major countries such as the United States, Germany, and China have indicated themselves that they believe that intangible assets will be more important than tangible assets as they scale and grow. So this is really the economy that we're living in. And therefore, we should really pay very close attention to companies that are rich in intangible assets. And if we look at the client base that we have at the bank, small and medium-sized enterprises with registered IP have definitely more potential in scaling and growing, whether it be having a growth rate of 1.6 more times than those that are more the bricks and mortar counterpart. They're more likely or twice as much to be more innovative and tend to have higher rates of both domestic and international expansion. The irony is that a lot of these SMEs do find it more difficult to raise adequate capital and financing. And that's because historically, a lot of the capital markets have put more value into hard assets or tangible assets. And it's really just at the nascent point of really understanding the value that intangible assets produce and how those intangible assets drive the company's future potential and success. And therefore, at the BDC, we recognize that there is a spot for these companies, and we should really be providing a lot more support to them as they become essentially the competitors for our country in the global stage. And therefore, back in July, we announced a $160 million fund to increase Canada's competitiveness in this intangibles economy. It's a first of its kind fund in Canada with four main goals. The first goal is to accelerate growth. And therefore, we're trying to solve the problem of, or answer the question of how do you grow companies and give them adequate financing to really be there when they need you the most. The second thing, or the second goal for this fund, is to help accelerate and address the underserved sectors that we know we have in our innovation economy or knowledge-based sectors. And that would be companies that are looking for capital in areas such as medical devices, hardware, semiconductor technologies, even some consumer products, as well as areas such as clean tech or advanced materials. It's not to say that there's no capital in these sectors, but what we do find is that there is still a gap and there's a lot of opportunities to provide meaningful capital in these industries. The third goal for this fund is to then help move these companies along by offering and facilitating the generation of IP advice and expertise. Intellectual property rights, the whole IP ecosystem is one that's still very nascent in Canada, and therefore it's very important for us to add value to the companies that we work with by getting them more involved in this ecosystem and connecting them with the right advice, either domestically or even globally. And then the fourth goal for this fund is to then help open the doors to an IP ecosystem and to be part of both private sector and public sector agencies and organizations that will support and champion these firms. And so now I'm going to take you through in greater detail what this IP-backed financing fund is about and what IP-backed financing is. So let's start with what is intellectual property-backed financing or IP financing. So IP financing is really an investment methodology that attributes value to a company's hard assets or tangible assets, as well as intangible assets. So it's a process where you put equal weighting on both, realizing that obviously tangible assets do create value for the company. So obviously in certain downside scenarios, they do provide some recovery efforts. But on the intangible asset side, we do know that there's a lot of economic and technological moats that intangible assets give to companies, as well as they do tend to drive a company's future potential. So in the case of the IP-backed financing fund within BDC, what we're looking to do is to provide this type of financing to both public across all knowledge-based industries and sectors. And we're looking to work with companies in three categories. So we need to see companies, first of all, that are growing. So it's very important for us to do IP-backed financing with companies that have already commercialized their IP with a minimum revenue threshold of $1 million over the last 12 months. We also want to see our companies to be innovative. Innovation is something that we've identified as companies with registered IP portfolios with granted patents. Currently, this practice is looking at or focusing on granted patents as the main form of IP that we're attributing value to. And over time, we would look to increase the breadth in which we can value other forms of intangible assets. What's unique about this fund is that when we look at companies, we're also looking at companies not just with sales and either products or services, but also licensing revenue streams. And this is why we believe that companies that would have come out of corporations or universities, spin-outs of these institutions that do tend to have started a company around an IP portfolio and then performed more R&D and then have gotten to a state where they've commercialized revenue streams. And then the third thing that we're, as far as these companies are concerned, is ambition, and ambition to see companies that have a strong plan to be a global player. Most of the companies that we're in discussions right now with are already exporting, not just outside Canada, but outside of North America as well. And it is this capital that we're providing to them that will help them further scale and grow and create more of a competitive moat around themselves. The structures that we're taking are very unique and very flexible. So we're providing very customized patient with. So we don't have a particular product or solution that we're putting forward. We're actually working very actively with the company to understand their needs, both in the short and midterm, and then crafting a solution based out of that. We're looking to make investments of somewhere between $3 to $10 million per company, and that could be between one or even multiple rounds. The financing structures that we're working with include the full spectrum of debt, quasi-equity or convertible structures, as well as pure equity investment, to be more leaders of rounds, or will act as a sole capital provider when it comes to more of the debt type of solutions. And then we tend to be more of a follow-on investor when we're looking at an equity round. And that's because we do tend to be more of a generalist fund, and therefore we don't have any domain-specific expertise on one sector industry. On the debt side, we offer, again, the full spectrum, so we can look at deals in terms of cash flow and mezzanine loans. We can do convertible notes as indicated, and really, you could see these as really bespoke structures where we're working very closely with companies to really identify a solution that fits. The advantages of this approach is that to the companies, we're offering very flexible terms that's, again, customized to their financial projections and milestones. We've adapted repayment to ensure that we're optimizing the amount of capital that's being reinvested in their growth, or the company maintains control over their destiny. And at the end of the day, we're here trying to provide more capital earlier in the process. I'll take you back now to talk about the team. So as Rob indicated, I joined the BDC in May and actually brought over my entire team from Quantius, which is another commercial lender. Since 2016, this team at Quantius has generated a lot of experience in really being able to structure deals and work with companies across different knowledge-based industries and sectors. It's a proven methodology. We've actually had very successful exits on all our portfolio companies. And it's also a connected, not just with local players, but global players in the IP space as well. And one of the other distinguishing factors about this team is because IP-backed financing is really a very multidisciplinary sort of form of investment, is that it's a very well-rounded team. We have individuals in our team who have a very traditional and very vast lending background. We have a very experienced VC investor in the team as well. And also someone who comes from the IP monetization space, such as myself, who are former operators. And it is this well-rounded team that really enables us to understand companies, understand their business models, their technologies, and their plans for growth much better and much faster. And lastly, it's a team that's been recognized by intellectual property offices outside of Canada as a team that has been able to produce very successful results when it comes to IP-backed financing. So you may ask, like, how is this actually done, and what makes it very different from a typical financing process that you would see with any other lender or equity provider? So what makes this very different is that we've developed a process that's specifically used for companies with rich intellectual property portfolios by having a lot of the IP-related discussions starting at the very early part of the process. So even as we're qualifying companies for investment, we're already, it's not enough that a company needs to have a granted patent, but we actually look at the entire portfolio of intellectual property that a company has. And that would be looking at their patent portfolio, understanding what they're patenting and what they're not. We may be looking at their trade secrets. We're looking at their copyrights, trademarks, and also what data they're collecting and how they will be using that data over time. As we go deeper into once we get into the due diligence process, we use IP analytics to essentially help us generate more insights to understand the company's business. And it's not just their actual business, but also the competitive space that they're in. So this due diligence process allows us then to look at what other forms of intellectual property rights are actually very complementary or very similar to these companies and who owns those rights. So this allows us to understand who are some of the other competitors of this company. Is it very litigious? Is there a lot of collaboration? Is there a lot of M&A? So these are just qualities and insights that we generate out of really using IP to understand the company's business. As we go into actually underwriting the loan or underwriting the investment, we use an actual IP valuation process to value the portfolio. And this are insights into really understanding in the case of a debt financing, what are the other forms of collateral that this company may have. And obviously in the case of equity financings, what future value perspective driven by IP that we could potentially look at. And then after an investment is made, we actually continue to monitor this IP portfolio. What this allows us to do is to really, in being a shadow IP strategy team with them or for them, is that we're looking at this IP landscape as this company is growing. It also allows us to make sure that they're very current in maintaining their IP portfolio, and also being able to help them generate new IP by providing them, again, with advice or prodding them to look at ways in which they can make this portfolio even more valuable in the future. And so it is with this new fund that we believe that we're very capable of being able to help knowledge-based companies. It's what the things that we do that makes us unique is we go very deep in analyzing the company's IP potential growth of that portfolio would be. It is also a case that the work that we do in really due diligencing this IP portfolio also sends signals to other investors to look at the quality of this company. And then the ongoing support that we provide allows us to very much so monitor the investment that we're making. And again, at the end of the day, what we try to do here is to provide more capital earlier in the process. Now, IP-backed financing or IP financing may have connotations of other kinds or forms of investments that we do not do. So we don't do any loan-to-own structures. We don't do any form of litigation finance. We certainly don't get into distressed debt situations. And obviously, in most of the investments we're making, we're not diluting ownership. We also don't finance first patent filings. We need to see a company already at a particular level of IP awareness and IP sophistication in order to work with them going forward. And so in conclusion, IP-backed financing is really a solution that we believe is very critical to this market as much as we are all trying to support and finance and grow competitive Canadian companies in a global scale. Through this fund, we're looking to provide patient and flexible funding to address the needs of a very unique type of company. Again, if I sort of had to provide more capital earlier to these companies that they wouldn't necessarily get from more traditional sources. And it's a team backed by experts who've been doing this for a while and have been recognized for the work that they've done. And lastly, one of the key value propositions of this fund is that it also opens up an extensive network to the companies that we work with, whether it be other funders, other lenders, and other IP practitioners in the space. So at this point, I wanted to thank you for, I guess, being part of the presentation or hearing this presentation today, and I'd be open to answering questions.
Yeah, Lally, I had a question. On your, I think it's your third slide, when on the S&P numbers that were rising, could you show that slide again?
Oh, okay. I'm just going to bring that up again.
Yeah, I think it was that one. Yeah. So I was really, on the left side, I was really amazed that, you know, that the 84% or that the reverse, the 16% was so low in terms of manufacturing, and you know, all the companies that obviously have a lot of tangible assets. So I just wondered if you could talk about that a little bit. I mean, even if you're manufacturing,
Sure.
whatever, of course you have IP,
Exactly.
and trademarks and patents, etc. But it just seems an incredible figure.
Yes. Yeah. So Ram, you are correct. So this is not just to say that only the companies, I guess, this is not really a chart that says that most of the S&P is weighted towards, let's say, technology companies. And what this is saying is that if we're looking at the value of the companies in the S&P 500, a lot of that value across all industries and across all companies already being driven by intangible assets. And that would be obviously the whole rundown of intangible assets. Obviously, there's intellectual property rights. Brand is a big proponent of intangible assets, as well as intellectual capital and know-how. But what it is saying is that it's not enough to just invest in hard assets or tangible assets in order to compete. It's almost going to be as important for companies across all industries and sectors to really focus on what intangible assets and how those intangible assets are really creating what we call a moat around themselves. And in fact, so this study was published by a firm called Ocean Tomo, and they, towards the end of last year, they did revise that study because obviously it was sort of a 5 years or a study that was conducted every 5 years, and the last chart that I saw indicated that that number is actually closer now to 90%.
It's an incredible number. Wow. Yeah, there's another question. Laureen, you have some questions?
Yes, so first, Ian Palm, our co-president in Toronto, he asked to speak. So Ian, it's your turn. Hey,
Thanks a lot, Lally. I really appreciate doing this. I know we've chatted in the past, and I just want to get your sense of, you know, since you've been on the ground, since you've been working with BDC here, how are you finding, you know, the activity level amongst the sort of group of target companies or target types of businesses you're looking to support here? I think, you know, as members of the M&A club, we'd be interested to get your insights there.
Right. So there's definitely been a lot of positive feedback from the market. We hear from a lot of companies across Canada, and I would say in all stages of growth. So because I think it's such a unmet need that it's just refreshing for the market to know that there's greater appreciation for companies that, again, very rich in intellectual property, especially those that focus really on the registered intellectual property rights. So we are seeing companies all across the country, I would say still pretty much concentrated on the large metropolitan areas, so Toronto, Montreal, Vancouver. But I think we've seen pretty much companies across or from most of all the provinces. What we are seeing too is that there's such a range. So the initial hypothesis that we will be seeing a lot more companies in those underserved sectors. So, and it's sort of proven true. A great amount of the companies we're seeing are in hardware and sort of advanced materials, medical devices, as well as a lot of consumer products that obviously are more electronically, I guess, focused. What we are seeing too is as far as the growth capital requirements, these are companies that do have a lot of, I'd say, momentum in their growth. As an example, there are a few of them are just landing those large contracts and really need to scale up. We have definitely seen companies that also have been affected by COVID, but also companies that have thrived because of COVID, especially those in, I would say, more advanced manufacturing or technologies that are better suited for remote work.
Wow, look, that's great. It's very helpful. I think you and I've chatted about this before, but I think that a lot of the members here who do work with I would say mid-market companies, some of them are companies that sort of don't fit into the categories that some of the the people that are financing SaaS companies or the flavor du jour of a tech company, and yet have pretty robust IP. And I thought some of your models for financing those opportunities was pretty compelling, and so would encourage those members of the M&A club who are looking for clients, who have clients that in needs in this area. I think certainly reach out to Lally and her team. I think it would be I think you'll find some positive reception.
Yes, yes, and I think that's I totally agree with that, Ian. It's not really just technology companies that we're looking to work with. I mean, some of the companies that we do see tend to be on the outside. I would say a lot more bricks and mortar, sort of in sort of style or model. But then if you actually look under the hood, we've seen a few companies that actually have very rich IP portfolios, in some cases very valuable. We've also seen companies where the actual IP is not necessarily, let's say, a sort of a patent on a particular product, but also services. So, and again, we're pretty much open in looking at companies where the underlying patent protection is in the form of a product, a service, or a licensing revenue stream.
Cool. That's great.
Okay.
The ideas are percolating. I'm making notes here. I got a couple of people I'm going to connect you with. Maybe it may take a day or so, but I got a couple ideas just thinking about what you presented here.
Yes, and I think we have a couple of questions here in the chat, so I can probably.
Yeah, that's right. I'm going to go on mute and.
Okay, so next question is from Anka Artan. Would the company part of an international consortium qualify for this type of financing?
Right, so if I'm getting this right, Anka, I guess one of the things to note is obviously because of the mandate of the BDC, we do have certain eligibility criteria. So obviously Canadian companies is the focus for us. So as long as we can look at the Canadian sort of Canadianness of the company, and then we can definitely consider them for funding under our eligibility criteria.
Okay, next question. It's relative to the one to Anka from Harvey Zalkman. Would foreign company who wants to expand into Canada be eligible for this financing? Right. So that's a very good question. I always said that my big, hairy, audacious goal for this fund is to not just support Canadian companies, but to encourage companies to come to Canada as well in pursuit of making sure that they're helping the Canadian economy grow. And we actually have been in discussions with some companies that have made a decision to actually be moving to Canada. And so again, we'll look at it on a case-by-case basis, but as long as we can see a Canadian company
in as far as it's creating Canadian jobs, making a contribution to the Canadian economy, then we will definitely consider that.
Thanks, Lally. Another question from Rafael Barchisha. What type of valuation are you relying for the IP? In addition, when a valuation report is provided, what is the maximum lending amount on the IP for, say, a 50 million IP value?
Right, so it's a very good question. So when we perform and use a variety of different valuation methodologies, when we're doing our IP valuation and when we're looking at an investment, so we may be using either a fair market value for that, use the income method as well as the cost method. We do tend to cater the valuation methodologies we're using based on the situation at hand. And also what is the degree of sophistication that the company's in and where they're at from a maturity perspective. And then the valuation that we do is done by ourselves, but then we also do tend to use third-party sources of data in order to make that valuation more robust and more complete. And then on your question with respect to the maximum lending amount, it really is a bespoke solution for us. So our investment sort of maximum is $10 million per company. But obviously, we will look at the situation at hand. It really depends on where the company is at in growth, in generating cash flows, and also the value of the IP. So there's no real one formula that we look at. But obviously, in the case where we see great value in the company's IP, then that gives us a lot more comfort in writing a larger check size.
Thanks, Lally. If you have some questions, feel free to write right now. So we are waiting a few seconds to see if we receive more questions. So a new question from Dino Fracassi. Would you partner with another lender?
Yes, and Dino, how are you? It's been a while since I've seen you. But yes, one of the mandates we have here is to really encourage other private sector players to join the IP bandwagon and help us finance with these companies. And so we're very much open to working with other lenders or capital providers and looking at opportunities where we may be able to co-invest or co-lend.
Thanks, Lally. Another question from Mark Lunik. Can you give an example of some recent deal completed?
Yes. So actually just last week, we announced the first deal that the fund has made, and it's a $2.6 million debt facility, a sub-debt facility to a Vancouver-based advanced manufacturing company called Novarc Technologies. What Novarc has done is that it has developed and has started selling the world's first collaborative robot for welders. So it's a technology that addresses the global shortage in welders. And what this technology does, it essentially helps welders fine-tune and do more like higher quality welding with a lot less requirements for experience and skills, because the collaborative robot essentially helps increase the accuracy of the welding job, and at the same time makes it an even safer sort of task for a welder to conduct. It's a company that's fast growing. Last year it was, I think, rated number 45 in the Globe and Mail's top 100 or 200 fastest growing companies in Canada. And so what this capital is going to be helping them with is to allow them to capitalize on a recent global distribution agreement that they've signed, and providing them resources to further their growth and increase their top line. It's a company that has done well during COVID, but obviously we want to make sure that we continue that momentum, and giving them this additional capital will allow them to scale much faster.
Thank you, Lally, for your answer. So
thanks for the question.
I guess we do not have any more questions. Maybe Bram, you want to close the session?
Thank you, Lally. This has been most interesting. And as I said in the beginning, a new subject for us, a relatively new subject, even though we're all involved with our clients with IP, obviously. You are most knowledgeable, most articulate, and we thank you for taking your time, to give us this presentation this morning. Thank you again to Robert Duffy for his introduction as Vice President for BDC in Ontario, and thank you to Louise Langevin, who's Vice President for BDC in Quebec. I want to introduce just briefly, again, Ian Palm is our co-president since 2015, since we started the Toronto chapter downtown. Ian is a senior partner with Gowlings in the First Canadian Place, where we have a lot of meetings in downtown Toronto when we have live meetings. And his co-president now is on the call, Melanie Russell at Calyx Valuations. Calyx does valuation work right across Canada. She has a team of, I don't know, several people or 10. It's a national company, and I'm sure, Melanie, you found this pretty interesting today. Both Ian and Melanie, of course, are on our committee for the Ontario M&A Awards Gala, which will happen late next fall. So thank you very much again to everybody for attending. Stay tuned for the next upcoming webinars. There's a really interesting one coming up with Ipsos, used to be Ipsos Reid, the national polling company, and the CEO, Daryl Bricker, has a lot to say about what's going on today, which we don't really maybe realize in terms of demographics and youth, millennials, buying habits of consumers, and of course, all kinds of immigration, all kinds of other things that we sort of don't realize that are going on, in addition to his outlook for future years as to what's happening in Canada. It's a most interesting presentation. It's going to happen. I think it's March 24th, but you can check the schedule. Angela Nache of Blake's, who's a senior partner in M&A with Blake's in Montreal, will be presenting the ABA, the American Bar Association, and also Blake's figures on M&A, all kinds of metrics, such as carve-outs and all the other technicalities of M&A deals and transactions during 2020. That will be in April or possibly May. He does this every year. It's going to be most interesting. We'll have another economic update from the chief economist of BDC. That's probably in June. And the beat goes on. So stay safe, everyone. And it's wonderful that we can really see strong light coming out of the tunnel. And hopefully that tunnel won't be very long. And we'll see you soon. Take good care. Thanks again, Lally.